Hey traders, in this video we're going to talk about profiting from a flash crash. Stay tuned. Hey traders, a very warm welcome to you. If you're new here, hello and welcome to the channel. If you've been here before, welcome back and thank you for subscribing. Okay, so flash crash is something that comes out of nowhere and it literally flushes to the downside, usually because there's no liquidity. No liquidity of buyers, or liquidity gets pulled very quickly. A lot of sellers, a lot of market orders hitting the book, a lot of algos trying to get out, a lot of people trying to get out of a very small door, causing this flash crash. Now, by definition of a flash crash, it's normally a crash. It's kind of a new thing, actually, pretty new in the last few years, I suppose, we've coined this phrase. We had crashes before which were, selling going on for days and days, or potentially, one day. But a flash crash is really something that's immediate. It happens and then it recovers somewhat. Might not recover all the way, but it recovers a lot from where it went, and it does a lot of movement very, very quickly. It might fire off a circuit breaker if you're trading something like the Dow overnight. It will trigger a circuit breaker, but some of the circuit breakers are still pretty wide. You can have pretty hefty flash crashes. So how do you profit from a flash crash? Well, if you had hindsight, obviously you would be able to, but the point is, how do we do it? Now, obviously, if we're watching it at the time, you might have an opportunity to trade it, but very often it's very, very quick and it's not likely to, you can't kind of do it. If you're there and happen to see it diving down and you see it turning back up, that's a great opportunity. But what I want to talk about today is using extreme limits to, just in case, catch that flash crash. What do I mean? So it is becoming a little bit more common. So let's say you are short, right? You're short on this FX pair, whatever it may be. So what you would normally do is you would structure your trade, and you may have limits for exit, you don't have a stop, whatever it may be. Also have, if you've got a kind of exit that is a way away, that you're kind of going to look at, you're going to assess it, why not have a really extreme limit? So the market's sitting here chugging, that's the normal thing, and you're kind of looking for this as a profit target. Instead of actually just saying, you know what, I'm gonna come out there, why don't you set an alert for that, assuming you're not trading Forex, you don't want to wake up in the middle of the night. Set an alert there so you can come out manually and have a limit order in here for an extreme move, like 800 pips, 1,000 pips, or whatever it is, so that if there is a flash crash, bang, you're in, you've caught it, you've exited your trade. What are the chances of it hitting? Probably pretty slim, okay? But the point is, if you get into the habit of putting an extreme limit order in, especially to close a position, I don't think I'd recommend specifically putting it in to get into a position, although you could if you were brave, but bearing in mind, 1,000 points might turn into 2,000, you don't want to be in that position. But if you're in a position already, you could put an extreme limit in to try and catch these little moves, or these big moves, or these extreme moves, should I say. So you frame your trade as you normally would, but you say, you know what, I'm going to put a kind of extreme limit in that just gets me into the trade. And what you can do is either split up your trade into kind of 3s or 4s or whatever scale, or like I say, don't put a limit in for your normal exit, but you're going to review it and understand and kind of manually close it. But if you do get that overnight flash crash, or you do get something that just kind of sucks all liquidity out, you might be lucky enough to just get filled on that and might get 1,000 points, 1,500 points, whatever it may be. So is that likely to happen? No, it's not. However, you only need to catch one of these and it's going to make your month, especially if you're in a normal trading size and you're kind of positioned in there and you just managed to snag it. It's a similar scenario that we use when we're trading extreme news. We're framing it with kind of crazy limits, so to speak, and you have them as far as you dare have them, and hoping that it tags one or the other. You might do it through data, you might do it overnight, you might do it whenever, but if you've got these in at extreme levels, at least then you're positioned, because let's be honest, when it happens, you're not going to be able to take advantage of it, because a genuine flash crash is going to come down and it's going to be straight back up before you've even been alerted to it. But if you've got that resting order in, even if you've got a few staggered in there, or however you do it, you can work it out yourself as best suits you. But the point is having that resting limit already in will mean that if it trades through it, you will be filled on it, rather than waiting and getting alerted and it's too late. At least you're there ready for it should you get that extreme move. So extreme limiting, guys, something to consider. Is it going to work for you? The chances are you won't get one, but if you do, you're lucky. All right, guys, see you next one. Take care. Keep the risk managed. Don't forget to give it a like if you like this kind of stuff. Stick your thoughts in the comment section below. Don't forget to subscribe for more videos from me and other traders on this channel. Much appreciated, guys. Take care. Bye-bye.